that right. Directional bias. This is your lesson of the day. You're going to have it. If you're a trader, you're going to have a bias one way or the other pretty much every single time you sit down and get into a trade. So the question becomes, how do you use it to your advantage? How do you avoid from having it blow up your account? So like a couple of things. First thing, let's just get this right out of the way. If you enter a trade, you are essentially saying, I want this name or this stock, or if you trade in the futures, this market, whatever it might be. I want this to go up if I am long from here before it goes down to a certain price, or if you're betting the market's going to go down, you're going short, I want this to reach a certain price lower before I have to cover it higher. That in and of itself is a bias. Every single trade you make, you have a bias in that moment in the direction you are going to make the trade. But that's not what I'm talking about. I'm talking about when you sit down and you believe that a general market or maybe a general sector is just going to move in one direction that day. So a directional bias in the market can be really valuable for hunting out opportunities if you're right. But I'm going to give you one tip. I've been trading a long time. And in over the 20 years that I've been on trading floors, all of the worst days traders have tend to involve when their directional bias is wrong for obvious reasons. If you think the general market is going up and it trends down all day long, well, you're going to be finding longs all over the place that are going to be losing. And I think it's something you have to be careful about. So let's get this out of the way. How can you try to avoid having the bias get you into trouble? There's a difference between having a bias and having a plan. And I want to set it up. Why do you have the bias in the first place? I'll give an example here with the NASDAQ overnight because we're in a bull market. Clearly, as you can tell, in the last couple of days, I've blotted out today. The last couple of days had the NASDAQ pressing higher. And then yesterday, we double topped right at the open and overnight and then made lower highs. And right at the end of the day, this is a 2 o'clock wick on a 60-minute chart. Right at 2 o'clock, we just tanked and trended down. So you had a rejection off the top and a reversal. Now for me, there were some individual names that looked weak at the end of the day as well that led me to a directional bias down. But that's the kind of thing that can have you come into the following day thinking the market is going to drop because you've made this indication of at least a temporary top. So if that's the reason that I have a directional bias, then the rule needs to go with it. What is going to tell me that that bias is wrong? You've got to have something. And if the reason I think the NASDAQ is going down is that rejection of the double top, the big hammer candle at 2 o'clock, I simply look at the trend afterward or the key levels. Trend down is pretty key, and the two key levels are going to be this 18.25 and then this previous high. If at the open we are breaking trend off of this previous high, then I'm going to be very, very patient and say, okay, I still believe in the short, but if we break it out at that 18.25, my second level, I've got to put my bias on the back burner for a second because my reason for liking the directional short was that. Now, individual names, you can hold shorts that are still in the money for you if they haven't triggered your stops, but I don't want to be adding and piling in if it's giving me indications that it's breaking the trend back to the upside. My reason for liking shorts in individual stocks was because of the NASDAQ trending down and selling past those levels. So if we start breaking them back out, I cannot be looking to re-enter against that trend. It's important to set yourself a rule. Remember, if you have a directional bias, you can still be trading individual names that are doing their own thing. So it's important if your reason is the NASDAQ, you develop something that says this is where I'm no longer as strong in my bias. If it comes back underneath, my bias is back on. If you don't set that rule, you're just going to constantly find shorts even as it goes against you, and you're just going to blow up your account. Now, another example of a bias can be on an individual stock. And I'll give you an example here on AMD for myself, which started out as a mixed bag, but thankfully worked out fine. The reason for the bias short, bit of a topping breakout that failed $205. So again, why was I short biased on the stock? Broke out yesterday at 05, found support, closed on weakness right back at the key price of 05. So my bias is I am short if this thing is not breaking out at the 05 level. So you're looking for short positions. Now, does that mean hold every short position at 205? No. Looking for shorts because of a certain condition is different from I am shorting it all the way into that price. So you've still got to set up individual trades that fit your bias. There is a difference between setting up a trade that conforms to your bias and simply just being in a net position the entire day in that direction regardless of price. If you ever are doing that, oh, I just want to be long, I don't care what price I get. Oh, I just want to be short, I don't care what price I get. Yeah, you've just set yourself up to lose because you don't have an out, you don't have a reason for being in the trade. So you set up trades that work underneath that price. If the stock is trading at 200 and I want shorts underneath 205, I've got to find a short that works underneath. So breaking down off the low, and then give it a stop back off the pre-market low. That's an actual trade, but I'll short it. Once it violates that rule, I get out and look for another short setup. I'm still biased to the short side. I don't mind looking for shorts. The opening range top, it wicks that top, fails that break. I look for a short with a stop out at the high. I'm getting in, trying to confirm my bias, but I'm willing to get out when it doesn't set up for me or it's no longer valid because I'm looking for shorts into 205. When it finally gets to 205, I'm not averaged in, I'm not holding it the entire way. I'm waiting for that top and you get the confirmation. And then I continue to look for things within my bias. Well, I'm only looking short. Once it breaks VWAP, I'm shorting into VWAP. When that violates, I get out of the trade. So if you have a bias on a stock, it's not I'm just short all day long underneath 205, which I suppose could be working depending on how you did it, but it's more about finding those short setups or long setups that both conform to your idea of trading, but give yourself an out. This is so important because what's going to happen is all of those days where you're just dead right and the shorts work out and you short into everything and your bias is correct, it's just going to give you all the reason in the world to not be disciplined on the days where you're wrong. And as I say, and I've been ending this pretty much every single day with a similar retort. When you make a trade and you get in, your out is the price you are paying for the winning trade. And I don't care how much you like a scoop of ice cream or a cup of coffee or whatever you happen to be into or an apple fritter. If I got to pay 20 bucks for an apple fritter, it's not worth it. I love an apple fritter. But if I got to pay 20 bucks for it, I'm not doing it. Because there's always a price you are not willing to pay for something, even if it is good. And trading is exactly the same way. And if you have to pay more, on your losses than you are winning, you're going to be in trouble. Having a bias directionally can be a good thing, but have a reason for what will make that bias go away in the market. And if you're trading an individual stock with a directional bias, make sure that all the trades you're looking for in that direction have their own reasons for getting in and out, not just I pick direction and go that way and hold it forever. So that's your lesson of the day. Bias is required when you trade. You're going to have it. I know everybody is. The second you get in the trade, you have a bias in that direction. But you've got to follow some rules if you want to make sure your account stays in the green. That's the lesson of the day. Use bias to your advantage.